The National Assembly has voted to set up a special committee to accelerate legislation aimed at paving the path to South Korea's $350 billion investment into the U.S. Hello, welcome to Press Perspective for this Wednesday, February 11th here in Seoul. I'm Min Sun-hee. Today we touch upon the efforts by the parliament here to push forward legislation related to South Korea's investment pledge under its trade deal with the Trump administration. For more on this, our freelance journalist Yang Chien-Hao here in the studio. Chien-Hao, welcome back.
Hello, long time no see.
I also have Professor Shim Myung-kyu at Yonsei University joining our talk virtually. Professor Shim, it's a pleasure to have you with us.
Thank you for having me.
Right, Chien-Hao, let's start here in the studio. Let's start off then with news of the National Assembly forming a committee to fast-track legislation related to investments in the U.S.
So during the APEC meeting in Gyeongju last year, South Korea and the United States reached the agreement under which Seoul would make $250 billion in direct investment in the United States with an additional $100 billion earmarked to support the American shipbuilding industry. And in return, Washington agreed to lower the reciprocal tariffs on South Korea, including auto-related tariffs from 25% to 15%. However, last month, in the end of last month, President Trump suddenly issued the statement saying that South Korea National Assembly had failed to fulfill the agreement as the related legislation had not been passed yet. So he then reversed the course, raising the tariffs back to 25%, a move that caught both South Korea government and the public opinion off guard. In fact, last November, the Democratic Party, the ruling party, had already submitted a draft bill titled the Special Act on an investment in the United States, but the ruling People Power Party expressed strong reservations, concerns, arguing that investing $350 million in exchange for tariff reductions was too high a price to pay. So the People Power Party also insisted that the memorandum of cooperation signed between South Korea and the United States on November 14 should be treated as a treaty first, and then therefore must first receive the National Assembly's approval before discussions on the special investment bill can proceed. And then the Democratic Party, however, countered that President Trump raised the tariff through executive orders without approval from the United States Congress. They argued that requiring South Korea to go through parliamentary ratification would impose greater constraints on Seoul. And they also claimed that since the Democratic Party has already proposed the Special Act, passage by the National Assembly could carry equivalent legal effect. So South Korea's presidential office shared the same view, stating that the agreement is a memorandum of cooperation, not a treaty, and therefore does not require a parliamentary approval. So the two major parties remain divided over how to handle the outcome of the trade negotiations with the United States. But the fact remains that President Trump has raised the tariffs, a move that could have a serious impact on South Koreans' industry. So over the past 2 weeks, we can see that the Seoul administration has repeatedly sent officials to Washington to deal with it for talks, but without any concrete results till now. So the National Assembly voted Monday to establish a special committee. The committee will consist of 16 lawmakers, 8 from the Democratic Party, and another 7 from the People Power Party, and 1 from the minor, small party, and will be chaired by People Power Party lawmaker. The committee will operate for 30 days with the goal of fast-tracking the bill in an effort to block further tariff hikes.
Right. And China, very briefly speaking, could you tell us what efforts are also underway to ensure that South Korea's investments into the U.S. lead to bilateral benefits while reducing risks?
Yeah, in fact, the tariff agreement reached between South Korea and the United States at Gyeongju initially sparked optimism. Many people are so glad, but indeed some local journalists remain skeptical, arguing that investing $350 billion in exchange for tariff reductions is fundamentally unfair. The size of the investment is raising concerns as questions remain over how such a massive sum, such a large number of money would be allocated and managed. And according to what we have learned, the South Korean government is moving ahead with a thorough review of proposed United States-bound investment projects before the related legislation is finalized in the National Assembly. Before receiving final approval, each investment plan will be evaluated based on profitability, strategic value, and the current foreign exchange environment to ensure that the money is really spent where it matters most. And such cautious approach reflects its concerns over a high level of uncertainty surrounding President Trump. As a result, South Korea government is seeking to retain stronger oversight and control over any large-scale investment in the United States.
Right. Professor Shim, speaking as a scholar, what are your thoughts with regard to South Korea's pledged investment of $350 billion in the US, of course? I mean, what are the gains to be garnered and perhaps what are the dangers, if you will, to be dealt with?
Yeah, let me first point out the bright side. It might play the role of keeping lower tariff rate that the exporting firms face, which improves their competitiveness in terms of prices in the US market. The recent news that Japan also has a similar issue with the US because of the delayed implementation of investment in the US reminds us the importance of such a deal. And this potentially increased GDP growth rate of the Korean economy, which heavily depends on the export. If the return is really materialized as is planned, it might not put a lot of pressure on the Korean economy as well as the Korean government. So it is not that a big deal if all the bright side really come true. However, it clearly has a clear con. There would be less domestic investment because investment in the US substitute or out domestic investment, which we have already experienced for a decade. And then there will be less employment in Korea. And I also want to point out that exporting firms tend to create high quality jobs because they are usually associated with high labor productivity. And if we lose such jobs, then there would be less income in Korea and that there will be less consumption, which counteracts the positive effects of the investment there in the US. So in the medium or maybe in the long run, this would lower domestic demand, potentially hurting the growth of the Korean economy. Unless we can make another plan to create more jobs and domestic investment, such an investment might hurt the Korean economy at the cost of lower tariff.
Right, so which is definitely something to think about. Chien-Hao, in the meantime, there are quite a number of people who believe that Mr. Trump's abrupt announcement of higher US tariffs on South Korea may have been in response to an exclusive interview of Finance Minister Koo Yoon-chul by Reuters earlier last month. Could you tell us a bit about that interview?
Yes, so this interview was conducted by the Reuters news agency on January 16th. It was like nearly 3 weeks ago. So when asked whether South Korea's investment in the United States could begin in the first half of this year, Minister Koo Yoon-chul responded that it was unlikely. He explained that even if a nuclear power plant gets selected, for example, there will be processes to follow, such as finding a location, designing it, and building it. So the initial outflows could be much smaller than that. Now a lot of investment can be made under the current forex situation, at least for this year. Another key issue drawing the attention is the continued depreciation of the Korean won. Recently, the exchange rate has recently hovered between 1,400 and 1,500 won per US dollar, levels close to those seen during South Korea's IMF financial crisis in 1997. With the won under pressure, the large-scale capital outflows, particularly United States dollars, could further weaken the Korean currency. And the Reuters also mentioned that the United States Treasury Secretary Scott Bessent discussed the recent depreciation of the won with Minister Koo, and that he himself also believes that the current exchange rate does not reflect South Korea's economic fundamentals. Stabilizing the foreign exchange market has therefore become a very important priority for the South Korean government. If the won were to recover, I think the Seoul government will likely be in a stronger position to pursue United States investments more decisively. As for whether the Reuters interview itself may have influenced President Trump's decision to raise tariffs, at least for me, it is still difficult to draw a direct conclusion. However, President Trump is widely seen as an impatient and eager to achieve results quickly. In reality, South Korea and the United States only reached their agreement in October and November, just 3 months ago. It is unrealistic to expect a country to immediately pass related legislation following the conclusion of a bilateral trade deal. From this perspective, President Trump's actions run counter to common practice and risk provoking negative reactions toward him and the United States.
And for now, Professor Shim, the Lee Jae-myung administration, it has clearly conveyed its commitment to the terms of its trade deal with the U.S. And as we mentioned earlier, the Parliament has set up a special committee to fast-track legislation related to investment in the U.S. by South Korean companies. Now, despite these tensions between Seoul and Washington, the South Korean stock market has been rallying ahead. How do you explain the strength of the local market, and what are your prospects going forward?
Yeah, I would like to first point out that the market does not seem to worry them much about what the U.S. president says, if it is the comment on the tariff rate. And if you look at, we actually have a similar phenomena on the Korean stock market. So if we analyze the stock market effect of the North Korea's threat on South Korea, it is also usually estimated to be almost zero. So it seems that these two phenomena seem to coincide with each other. People do not seem to care that much about such events that seriously anymore, because they are kind of the empty threat at some point, although it is it is believed to be some threat, but he changes his comment a lot. So maybe people do not really believe that it really hurt the Korean economy. Also, the global economy is expected to grow more than expected before, maybe in the last year, as was recently noted by the IMF. And because Korea really depends on the state of the global economy, especially the export of memory chips and related products, including cars, such a rosy outlook on the global economy seems to make people expect higher future dividend, and it is reflected by the rising stock prices. However, although we can still hold a similar rosy view on the Korean stock market at this point, there are still many other factors, including trade uncertainty that we face these days a lot, heightened geographical risk around the world, and the possible threat from the inflation rate that can potentially drag down the global economy. So I think that while the trend of the KOSPI index that we have seen several months might continue for a while, but it might also fluctuate a lot.
Right, indeed. And before we delve deeper into the presence of those variables, Chien-Hao, the Korea Development Institute, in its latest assessment of the South Korean economy, has said that the stock market rally has reflected positively on domestic consumption, hence keeping the Korean economy on its recovery path. Could you tell us a bit more about this?
Yes. So in December, the industrial production rose 1.5% from the previous month, while retail sales increased 0.9%, reversing the decline seen in November last year. Service sector output also grew 3.7% year-on-year, with gains recorded across most industries, suggesting that the recovery is broad-based and supported by rising incomes and the cumulative effects of interest rate cuts. Consumer spending in South Korea is gradually regaining momentum. Consumer confidence also remains strong. And meanwhile, the sharp increase in semiconductor prices, particularly memory chips, has helped drive a notable rise in South Korea's overall exports value. And also, separate figure from the Ministry of Data and Statistics from South Korea government shows that the consumer inflation in January eased to 2%, the lowest level in 5 months. And officials say that the slowdown was largely due to relatively stable exchange rates and a decline in global oil price, which fell from around $80 per barrel last January to about $60 this January. So for South Korea, these developments mark long-awaited positive news, and the key question now is whether the Seoul authority can persuade President Trump to reconsider his stance and lower the tariff to a more manageable level.
Right, indeed. And now, Professor Shim, then, what more can you tell us about the potential variables to South Korea's economic growth for this year, 2026?
My expectation is that the forecast of the BOK and the KDI, as you just mentioned, and or the IMF, which are all about 1.8% of GDP growth rate in 2026, would be realized if there's no significant negative shocks either to the Korean or the global economy. Let me further point out that the inflation expectation in Korea has been steadily about 2.6%, which is above 2%. So the inflation rate from, which is the inflation rate, actual inflation rate from CPI in the last month, together with greater GDP growth rate than expected before, this clearly indicates that the economy recently expanded due to the greater demand. And it might be a positive response of consumption to the transfer on the household in the previous year. And hopefully such an effect would have more positive shock on the economy also this year, because it usually takes several quarters for the investment to respond to greater demand. So, and the exchange rate, which has become too high from the last year, it might be a kind of the favorable situation for the exporting firms because it lowers the price of the goods that is exported from South Korea to other countries. And as I mentioned earlier, export is really important for the Korean economy, and it can also contribute a little bit rosy outlook than before because it increases the price competitiveness of the Korean firms. But as I mentioned a little bit earlier, we also should notice that there are so many factors that could negatively affect the Korean and the global economy, like the uncertainty surrounding the global economy is still there, and tariff pressure from the US would continue also in this year. So the economy might grow less than expected.
Right, quite a number of external risk factors then. Moving forward, Chien-Hao, last week, South Korea joined a new trade bloc led by the US. It's called the Forum on Resource Geostrategic Engagement, also known as FORGE. Could you tell us a bit about this trade bloc, its purpose as well as implications?
So at present, many of the raw materials used in semiconductor production, including rare earths and various metals, are produced and refined in China. That's all we know. And for some metals, China controls as much as like 80 or 90% of the global supply. That means if Beijing authority imposes, for example, sanctions or retaliatory measures against a specific country, it could really be enough to disrupt that country's economy or trigger serious supply chain problems. So FORGE is a recently established multilateral cooperation framework led by the United States, mainly focused on supply chains for critical minerals. The core missions of Forge is to build a safer, a more reliable, and more diversified supply chains for critical minerals through cross-border cooperation. The group aims to reduce the risks associated with dependence on the single source, particularly China. Under Forge, countries work together to develop strategies to prevent key raw materials from being used as political leverage or tool of supply monopolization. And the goal is to reduce the risk of international markets being weaponized for geopolitical purposes. And South Korea this time will serve as Forge chair country from February through June, and the mechanism currently includes 54 member countries, among them with Japan, with India, with Australia, Canada, and Ukraine. And Forge is also now trying to discuss the possibility of setting up the price floors for key minerals in an effort to prevent China from undercutting prices through dumping practices. Such measures are intended to protect Western companies' profitability and reduce the risk of long-term supply monopolization.
Right. Now, interestingly, Professor Shim, after joining the US-led trade bloc, South Korea also announced closer cooperation with China on critical mineral supply chains. Do you suppose this is a visible sign of pragmatic diplomacy? I mean, if that is the case, what makes this form of diplomacy so important in today's world of geopolitics?
Yeah, I think it is a clear sign of pragmatic diplomacy. The tension between the US and China still continues, and even worse, political tension between the US and other countries, including Denmark, Venezuela, Iran, and Canada also emerged. And such political tensions disrupt international trade more. So to have a close and concrete economic relationship with other countries than the US, including China, would help firms to make more investment and production plans under less uncertain future demand, because they really create a lot of demand for the goods that the Korean firms export. And history shows us that relying only on a particular country may increase the uncertainty level that surrounds the Korean economy when the relationship can be in trouble. And if we also think about the case of Canada, which was believed to be one of the closest partners to the US, it also seems to increase the relationship with China, which is somewhat striking to most of us. So if that is really the case, Korea has a particular experience, kind of the similar problem with China and Japan several years ago, and it really hurt the exports and imports in Korea. So I believe that if we look at all the historical factors, the current action of the government is really necessary at this point.
Right, indeed. All right, Professor Shim Myung-kyu at Yonsei University, thank you so much for your insights today.
Thank you.
And Chien-Hao here in the studio, thank you very much for your time and your thoughts.
Thank you.
Right, that is all for this edition of Press Perspective. As always, thank you for watching.